Okay, so Nvidia, right. It seems like you just can't talk about AI stocks these days without them popping up.
Yeah, they're kind of everywhere.
Huge annual revenue, like $100 billion, massive market cap. They're for sure a major player.
Absolutely, yeah. Central to the whole industry, really.
But here's the thing.
Yeah.
What if I told you that the best AI stock to buy right now, the most compelling one, might actually not be the obvious one?
Oh, that's interesting.
So today we're going to dive deep into this analysis.
Okay.
It's from the Motley Fool.
Yeah, I know them.
And they make this fascinating argument Amazon.
Amazon.
Yeah, as a better AI stock than Nvidia.
Interesting. Okay.
So our mission in this deep dive is to unpack this article. It's called My Top Artificial Intelligence AI Stock to Buy Today. Hint, it's not Nvidia.
How's it going?
And it's by Brett Schaefer.
Okay.
It was published on the Motley Fool on March 29th, 2025.
Okay, got it.
And he lays out this really interesting argument, basically focusing on Amazon's revenue, their profit margins, and like where the long-term AI growth might actually be.
Okay.
So we're not dismissing Nvidia or anything,
Right.
but we're going to explore a different angle here.
I'm with you.
We all see how strong Nvidia is right now.
Yeah, absolutely.
But this analysis really kind of made me step back and think about, the big picture a little more.
I see. Yeah.
So the article basically emphasizes this idea
Yeah.
that AI for Amazon, it's not just like a side project,
Right.
It's becoming like deeply integrated across their entire business.
Makes sense.
It's not just one specific thing that AI could affect.
I see.
And so what I found really fascinating was just how many different ways Amazon can actually leverage AI
Okay.
across all their different divisions.
Interesting.
So the article really highlights how this like widespread potential for using AI offers them all these different paths to increased efficiency and growth.
That makes a lot of sense.
So let's just like jump into a really tangible example. Their e-commerce and retail stuff. So we know that they already use a ton of robots in their warehouses.
Oh, yeah, I've seen videos.
Hundreds of thousands, according to the article.
Okay.
And what the analysis suggests is that generative AI could potentially like dramatically improve the efficiency of all those robots.
Oh, interesting.
And even further streamline their whole operation.
So, like, how would that actually work?
Well, so think about like these robots becoming much more intelligent and adaptable because of AI, right?
Yeah, yeah.
That would mean faster processing, fewer errors, lower costs.
That's a huge deal.
And they even talk about this new futuristic warehouse they have.
Okay.
It's in Shreveport, Louisiana.
I haven't heard about that one.
And it's designed to have like 10 times as many robots
10 times
as their current facilities.
Wow.
Which really shows you like how serious they are about automation powered by AI.
So it's not just like a small experiment or anything.
No, they're going all in on this.
Wow, that's really interesting.
And then think about like Amazon's advertising business.
Oh, yeah.
They're pulling in $56 billion a year in revenue from that.
That's crazy.
But here's a point that really kind of stood out to me in the article.
Yeah.
They talk about their AI image generator.
Oh, really?
And this lets like brands create better sponsored listings and more effective ads.
So that's how they're using AI in advertising.
Yeah, and advertising is a high profit area for Amazon.
Yeah, it's a huge part of their business.
So if AI can make those ads work even better, the returns could be massive.
Right, because like every little improvement in ad performance can translate to a lot more revenue for Amazon.
It's a very smart move.
It is, yeah.
And then it's not just all behind the scenes stuff either.
Oh, okay.
AI is also impacting like how we interact with Amazon as customers.
Do you mean directly?
Yeah, they have this AI assistant called Rufus.
Rufus.
Yeah, it's on their marketplace. And it helps customers figure out what to buy from their massive selection.
Oh, see.
It can even give you like summaries of the reviews.
It's pretty handy, actually.
And it's all about making the shopping experience better, right?
Yeah, it makes sense.
So if it's easier to find what you're looking for, you're probably going to buy more.
Right, yeah.
And that's good for Amazon.
So it's like win-win.
Yeah, exactly.
Yeah, cool.
Okay, let's switch gears a bit and talk about Amazon Web Services.
AWS, yeah.
That's their cloud computing arm.
Right, their massive one.
And the article argues that this rise of AI software tools is actually a really big positive driver for AWS.
Makes sense.
Because think about all the computing power you need to develop and run these complex AI models.
It's a ton, right?
It's a huge amount.
Yeah, I mean, I've heard about companies like Anthropic.
Yeah.
That they rely heavily on AWS for their work.
And the interesting thing is that AWS revenue growth has been accelerating.
Oh, really?
Yeah, it's up 19% year over year in the last 3 quarters.
Okay, so even with everything going on.
Exactly.
Their revenue is still going
Yeah,
up.
and they made $107 billion last year just from AWS.
That's insane.
And here's another thing.
Yeah.
Amazon's management has actually said that they're struggling to keep up with the demand from all these AI startups.
Oh, wow. So the demand is really that high.
Yeah, there's like a huge need for AI computing power right now.
Okay, so AWS is like in the perfect spot to provide that.
Exactly. They're right in the middle of it.
So not only is AWS growing really fast,
right?
But it's also incredibly profitable.
Exactly.
Like, what was their operating margin?
37% in 2024.
37%. That's insane.
Yeah, they contributed over half of Amazon's total operating income.
Really?
Just from AWS.
That's wild.
And that's like seriously high margins.
It is.
Now, the article does say that these margins might go down a little bit.
Okay, why?
Because eventually the supply of computing power will catch up with the demand.
Oh, that makes sense.
But even so, AWS is still expected to stay highly profitable.
Yeah, even with a little dip.
And like a crucial part of Amazon's business.
So that's really interesting, right? Because you have Nvidia, which is very tied to like selling chips. And that's kind of a cyclical business.
It is, yeah.
But then you have AWS,
right,
which is based on this fundamental need for computing power. And that need is only going to grow with AI.
Exactly.
So even if there's a little bump in the road, their overall profitability is likely to remain very strong.
I see.
Okay, so we've talked about how Amazon uses AI in a bunch of different ways. But how do they actually stack up against Nvidia financially?
Oh, okay. So the article gets into that.
Okay, cool.
And they look at the forward price to earnings ratio, or PE.
PE ratio, yeah.
And for those who don't know, the forward PE ratio tells you how much investors are willing to pay for every dollar of a company's expected future earnings.
Okay, so it's like a measure of how much faith investors have in the company's future.
Exactly.
Interesting.
So Nvidia's forward PE is about 26.6.
Okay.
And Amazon's is 32.4.
So Nvidia's is lower.
Yeah. So you might look at that and think, oh, Nvidia is a better value.
Makes sense.
But the article says, hey, hold on.
Okay.
You got to think about the long term.
Oh, I see.
So they talk about how Nvidia's business has gone in cycles.
Like up and down.
Yeah, sometimes revenue slows down.
Okay.
Profit margins decline.
Right.
And they argue that once this huge demand for AI chips calms down a bit, we could see a similar pattern.
So their current earnings might not be sustainable.
Exactly. Their earnings are high right now because they're selling so many chips. And their operating margins are like record high.
Okay.
But that might not last.
I see.
Now, in contrast, the article suggests that Amazon's operating margin is more likely to increase over time.
Interesting. Why is that?
So in 2024, their operating margin was about 10.75%.
Okay, so not as high as Nvidia's.
But the potential for growth is there.
Okay, I'm listening.
The article says that as AWS keeps growing and as AI makes their advertising and e-commerce stuff more efficient, Amazon's operating margin could get close to 20% in the next few years.
Wow, that's a big jump.
Yeah, it is.
So let's imagine what that would mean.
Okay.
If Amazon's revenue goes from like $638 billion to $800 billion, and their operating margin hits 20%,
right?
That would be about $160 billion in earnings.
That's massive.
That's up from $68.6 billion in 2024.
Yeah, it's a huge difference.
So that's the power of operating leverage, right?
Yeah, exactly.
As your revenue grows and your profit margin expands, your earnings can skyrocket.
It's a pretty powerful effect.
It is, and that's why the article basically says that Amazon could be the best AI stock to buy for the long term.
Right. So even though Nvidia looks better right now, based on that lower PE ratio, Amazon's potential for big earnings growth could lead to its PE ratio going down faster over time.
Right.
And that makes it a more appealing long-term investment in AI.
Yeah, it's a really interesting argument.
It is. It's all about looking beyond the current hype and focusing on the things that will drive sustainable growth.
And, you know, you always have to consider future profitability, too.
Of course.
And I think the article does a good job of explaining why Amazon is well-positioned.
Yeah, it does.
To really benefit from AI across its whole business.
So, I mean, it's good to be transparent.
Yeah.
The author, Brett Schaefer, he does own some Amazon stock.
Right. And The Motley Fool, they recommend both Amazon and Nvidia.
Okay, so they're not, like, biased or anything.
Yeah, and they have their standard disclosure policies, too.
Good to know.
Oh, and also John Mackey.
John Mackey.
Yeah, the former CEO of Whole Foods.
Oh, yeah, okay.
Which is owned by Amazon, is on the Motley Fool's board of directors.
Oh, interesting.
So it's good to be aware of those connections.
Yeah, absolutely. Transparency is key.
Okay, so let's wrap this up.
Yeah.
The Motley Fool analysis we looked at today. It gives us a really interesting perspective.
Yeah, it does.
Nvidia is clearly the big player in AI hardware right now.
Right.
But the argument for Amazon is that they're integrating AI into everything they do.
Yeah, it's a much broader approach.
And they have this high-growth, high-margin business with AWS, which is already benefiting from the demand for AI infrastructure, right?
Plus, they have the potential to improve margins in e-commerce and advertising.
Exactly. And when you combine those things, it paints a pretty compelling picture for Amazon's long-term growth.
It does. It makes you think differently about where the real value in AI might be.
Yeah, it's not just about the companies building the technology itself. It's about the companies that can actually use it effectively.
Right. And Amazon, with its huge infrastructure and all its customers.
They're in a really unique position to leverage AI for growth.
I think you're right.
So here's something for you to think about.
Okay.
Beyond the obvious AI companies, like the hardware and software companies, what other businesses out there do you think are well-suited to use AI for growth in the future?
Interesting.
Think about the companies with established infrastructure, strong customer relationships, and the ability to really apply AI in a meaningful way.
That's a good point.
Because the implications of AI are huge.
Oh, yeah, they are. Yeah.
And the companies that can capitalize on it will be the ones that create the most value in the long run.
It's something to really consider.
Yeah.
Thanks for that.
You're welcome.
It's been a great discussion.
It has, yeah. I'm glad we could dive into this.